Student, today I'm going to take one problem on investment accounting. In that problem, you will find that investment in bond as well as investment in equity shares. That means both the part that is included in this problem. So you will be able to understand how to prepare bond account, that is 12% bond account, as well as equity shares account in one person book, and that is nothing but Nidhi. So here the problem is as follows. The following transactions of Mr. Anil took place during the year ended 31st March 2018. What does it mean that Mr. Anil's year ending is 31st March and year start on 1st April 2017? So first and very important task in front of you is nothing but you have to draw. First you have to draw this two accounts with proper columns, that is date, particular, nominal value, interest, cost, date, particular, interest, nominal value, interest and cost. Equity shares also in the books of Nidhi. Now here the first and very important thing is that you have to do this timeline. Now what does it mean? Timeline means what? That year start from where? The year start from April 17 and ends on 31st March 2018. That is what called as a timeline. Next thing is very important, that is what is the due date. The due date they have given in the first part, that on 1st April 2017 Mr. Anil purchased rupees 4,02,500 12% government bonds at 80.50 cum interest. This cum interest price is very important that you have to remember. And interest is payable on 1st November and 1st May every year. And face value of the bond is, each bond is rupees 100. So here two information they have given. One is interest is payable on 1st November and second, that is 1st May every year. So here interest on 1st May, that is what due date, and second is 1st November, and that is nothing but the another due date. That means on this day that Mr. Anil is going to receive that interest for previous 6 months. In 1st November, Anil is going to receive that interest from May, June, July, August, September, October. November doesn't include because this is the 1st November, remember. So due dates are very important. Okay, now let us start solving this problem. On 1st April, he purchased 4,02,500 12% government bonds at rupees 80.50 cum interest. Now here the important point is that this 80 rupees 50 paise is nothing but the price of that bond. We want cost of that bond. Okay, so 1st April. So let us find out first that the price. What is the price is given? The price is nothing but we have to find out number of bonds. So number of bonds we can find out by this way. What is the market value of bond? The market value of bond is 80.50, that is 4,02,500. Market value of bond is 4,02,500. Then what is the market price? Market price is nothing but 81 rupees. Okay. Here some changes that you have to make. 81. So how many debenture or bond, that number of bonds to be purchased? 5,000. How this 5,000 used to come? Is 4,02,500 divided by 81. So he purchased total 5,000 bonds. And what is the nominal value of each bond? Nominal value of each bond is nothing but 100 rupees. So here the first entry that you have to make is on 1st April to bank account, because it is purchase. Nominal value, how you will calculate the nominal value? Look at this, 5,000 multiplied by 100, that is 5 lakh. Now next part is we have to calculate interest. How to calculate the interest? We have purchased on 1st April. So 1st April. So how many days are there from the last due date? So last due date may be November 2016. So 1st November, then December, then January, then February and March. April doesn't include. So how many months? 5 months. So 5 months interest we have to calculate at the rate of 12%, because rate of interest is 12%. So here 25,000. And how I calculated this? See, C4 means 5 lakh. 5 lakh multiplied by 12 divided by 100. 12 divided by 100 means that is the rate of interest multiplied by 5 months, because from last due date outstanding interest that we have to calculate. So 5 months divided by 12 months, that comes to 25,000. Now we have to find out the cost. The cost is very simple, that is nothing but how much cost they have given in the problem? 4,02,500. So this 4,02,500 is including interest. Term interest means including interest. So from 4,05,000, if you deduct that interest, you will get interest is what? 25,000. So see here formula, 4,02,500 minus 25,000, you will get cost of this 12% government bond. So remember here how we have calculated this 5,000 government bond. We have calculated 5,000 government bond by this formula. I hope all of you have followed this. Next one now. Second transaction on 12th April 2017. What happened on 12th April 2017? Anil purchased 50,000 equity shares of rupees 10 each in Info Limited for 20 lakh. Very simple. Now we have to come to the equity. The transaction over here on 12th April is nothing but the purchase transaction. So purchase transaction means to bank. What is the nominal value of equity shares that we have purchased? Total number of equity shares we have purchased is 50,000 multiplied by 10, that comes to 5 lakh. Dividend, there is no dividend. Now cost they have already mentioned, that is 20 lakh. So equity shares purchase is very simple. Just you have to write to bank, whatever the nominal value, dividend. We don't calculate dividend because there is no concept of ex-dividend and cum dividend over here. And here the cost price they have already given. Next. On 1st May 2017, Mr. Nitin is going to receive that interest of 12% bonds for half year. Half year means 6 months. So whatever the bonds that Nitin is holding. Now Nitin is holding, what is the nominal value of bonds? 5 lakh. On that 5 lakh, that Nitin is going to get what? Interest. So here on 1st May, because that is a due date. If you look at that, our timeline, 1st May is what? Due date. So on due date, that Nitin is going to get what? Interest, that is by bank. Nominal value 0, cost column 0. Now interest. How to calculate that the interest for 6 months? 6 months, that is on 5 lakh. So here 30,000. How that 30,000 arises? C4. C4 means 5 lakh. 5 lakh multiplied by 12 divided by 100. That is the rate of interest. Multiplied by how many months? 6 months divided by 12. Very simple. Okay, now we will go further. Next. On 15th May 2017, Infi Limited made bonus issue of 3 equity shares for every 2 shares held. Now remember here that ratio is very important. For every 2 share, Infi Limited is going to give 3 equity shares. Very good. Infi Limited is very famous for giving bonus shares. So this is a bonus on 15th May. So bonus shares, recording of the bonus share is very simple. Just you have to go to the debit side, that is 15th May 2017. Here you have to write what? To bonus, and calculation of the bonus that we are going to do on working note number 1. That is over here. What is the old shares that if you are holding 2 shares, company is going to offer 3 shares. For every 2 shares, company is going to give 3 shares. Now how many shares that Mr. Nitin is what holding? Nitin is holding 50,000 shares. So here 50,000 shares that Nitin is holding. So how many shares that Nitin is going to get? Nitin is going to get, that is 50,000 multiplied by 3 divided by 2. It comes to 75,000. So here bonus shares is 75,000. So 75 multiplied by 10 in the nominal value column, that is 7,50,000. Dividend 0, cost 0. Dear student, remember this 0, because you don't have to record anything in the cost, because bonus shares are always at free of cost. Chalo, now next. Now on 15 June 2017, Mr. Anil sold 62,500 bonus shares for rupees 20 each. Now whatever the bonus he got, for that cost is what? Nil. And he sold that 62,500 at rupees 20. That means whatever that he is going to get at the money, 20 rupees per share, is what? Profit. So there is no need of calculation of weighted average cost. First we will write that sales ka part. On 15 June, there is sales. How many shares he sold? 62,500. So 62,500 multiplied by 10. That comes to 6,25,000. There is no concept of dividend. And what is the cost? Cost is 62,500. 62,500 multiplied by 20. See this, 62,500 multiplied by 20. That comes to 12,50,000. And dear student, remember, these are the shares that he sold out of bonus. So for bonus, the cost is what? Nil. So whatever that the selling price is nothing but your profit. And that profit we have to record on the debit side on same day, 15 June. Next, profit and loss account, nominal value column 0, dividend 0, and how much profit that the company that Mr. Nitin earned? 12 lakh 50,000. So here 12 lakh 50,000. So total profit is 12 lakh 50,000. Now next one. What happened on 1st October 2017? That he sold 1 lakh rupees, 1 lakh 50,000 12% debenture at 80x interest. That means whatever 1 lakh 50,000, that is nothing but the price. So here that is on 110. Now 110 means 1st October, right? 1st October sold. Sold means buyback. Now we have to calculate that how many debentures or the bond, that is what sold out. How to calculate? Here it comes to 1 lakh 50,000. What is the price? 1 lakh 50,000. It's the X interest, cost price. Divide by 80. Price is what? 80. That is X interest, means interest is not included in this. So multiply by nominal value 100. So it comes to 1,87,500. Now this is 1st October. So 1st October, where is that 1st October? This is the 1st October. Now we have to calculate the interest from last due date. May, June, July, August, September. Bus. So 1, 2, 3, 4 and 5. So 5 months interest that we have to calculate over here on nominal value of 1,87,000. So it comes to 9,375. How I calculated this 9,375? 1,87,500 multiplied by 12 divided by 100 multiplied by 5, because 5 months outstanding interest from last due date divided by 12, it comes to 9,375. Now what is the cost? Cost they have given, we have calculated 1,875 debenture that we sold multiplied by 80 rupees, as the rate is what? 80 rupees. So it comes to 1 lakh 50. They have already given 1 lakh 50. See this 1 lakh 50. It is a X interest. So that's why that 1 lakh 50,000 we have recorded over here. Last part. The last part, that is on 1st November, that Mr. Anil received half year's bond interest. So here on 1st November, Anil received interest. So nominal value column 0, cost column 0, and here we have to calculate what? Interest. Interest on what? Interest on the balancing figure of the nominal value. So what we have done, that 5 lakh debit side and sold is 1,87,000. So whatever the amount used to come, that amount comes to 18,750. And now how this amount I have calculated, this C4. C4 is 5 lakh minus H5, 1,87,500 multiply by 12 divided by 100, that is the rate of interest, and here multiply by 6 divided by 12, and that comes to 18,750. So our problem is small, not yet finished, but closing also is very, very important. Now we are going to close this 12% government bond. First you can close very simple, that is nominal value. So 5 lakh debit, 5 lakh credit, and now what is the balancing figure? Balancing figure on 31st March 2018, it comes to 3,12,500. How the 3,12,500 comes? 5 lakh minus 1,87,500. Nominal value you can close and find out the balance, and that balance you have to carry forward. But while calculating that the interest, that we have to calculate interest outstanding for this nominal value that we are going to carry forward. So here, what is that interest that we are going to carry forward? That is nothing but outstanding interest that we have to carry forward from 31st March to next due date. So from 31st March to next due date means yeah, 31st March. So 31st March to next due date. Next due date comes to May. So April, from last due date that we have to calculate. Last due date on 1st November. So November ka 1, December 2, January 3, February 4, and 31st March 5. So 5 months interest we have to calculate outstanding on 3,12,500. So we have calculated over here. See, H7 means 3,12,500. 12% multiplied by 5 divided by 12, that is what? Now you can close interest. Total on debit side, the credit side is 73,500, and you have to write over 73,500. Now whatever that the profit or loss that we receive, that we have to write over here as to profit and loss, that is 48,750. Lastly, that you have to close this 12% debenture bond. Debit side total 3,91,000, credit side also 3,91,000, and balance you have to calculate. That balance comes to 2,41,000 that you have to carry forward. So here, that the end of this 12% government bonds. Now equity shares. Equity shares are very simple. Equity share, just you have to close and find out that the balances, and that balances you have to carry forward. Here, that the balance comes, this is the total, here also total. So balancing figure is 20 lakh, and that balance you have to carry forward. The problem solution for this problem is over. Only thing is that the difference is nothing but here they have given directly that X interest price and cum interest price. Otherwise, what is the new thing in this problem? That you have to learn that if one person investing in bonds also and equity also, then you have to make a separate account for bond and separate account for equity. I hope all of you have followed this. Thank you.